Welcome back to Decode with Nitin. Today, we're diving straight into Nifty's wild ride closing at 24,716.6 yesterday, down just 0.14%. But beneath that quiet surface, there's turbulence. Our index has been swinging between 24, 600, and 25, 100 all week. What does this tell us about market sentiment right now?
Nitin, market psychology is fascinating here. When Nifty hovers in such a tight range, it's like watching a seesaw. Neither bulls nor bears are willing to take firm control. That sideways movement often signals indecision, especially before a big catalyst. Many traders call this the calm before the storm.
I love that analogy. And looking at GIF Nifty's positive close last night, you'd expect some optimism. But with resistance at 24,870 and support at 24,700 acting like a psychological safety net, is this range more than just numbers on a chart?
Absolutely. These levels become self-fulfilling prophecies. For example, the 24,700 support is like a therapist for nervous investors. It reassures them. But every failed breakout at 24,870 adds to the hesitation. Until we see a decisive move, traders will keep playing ping pong within this bandwidth.
Let's pivot to sectors, because even in a sideways market, there's always action somewhere. PSU banks came out swinging, PNB up 2.58%, BOB 2.25%, Canara Bank 2%. What's fueling this bank rally, and is it sustainable?
Public sector banks are riding a wave of strong credit growth and better asset quality. When the rest of the market is cautious, investors flock to sectors showing resilience. Plus, with India's government pushing infrastructure and lending, PSU banks look like the market's MVPs for now.
On the flip side, IT and metals are sulking, down 1.2% and 1.4%. Global trade tensions seem to be the villain here. Can you break down how international events ripple through these Indian sectors?
Sure. Think of IT as India's software export engine. US and Europe are its main customers. Any uncertainty abroad, like tariffs or tech regulation, hits their bottom line. Metals, meanwhile, are a barometer for global manufacturing and trade, so when the world sneezes, these stocks catch a cold.
Yet M in autos bucked the trend, up 1.75%. Is this the EV story in play?
Exactly. Mahindra's EV ambitions are giving it wings, even as the rest of the sector stalls. Investors are betting on future-ready themes, not just current earnings. A trend we'll see more as India's auto market evolves.
Every day, the tug-of-war between foreign and domestic investors shapes our markets. Yesterday, FII sold through 589 crore, but DII swooped in, buying 313 crore. What's driving this clash? And should retail investors pick a side?
It's a classic case of global versus local confidence. FIIs often react to macro uncertainty, think US rates or geopolitics, while DIIs, especially mutual funds, are powered by SIPs from Indian households. This massive domestic inflow gives India a unique buffer against foreign sell-offs.
That's a great point. With over 11.2 crore retail investors now on NSE and 78% of April's derivatives trades coming from small tickets, is the market narrative shifting from foreign dominance to domestic strength?
Absolutely. We're witnessing the Bharat investor revolution where retail and DIIs are no longer spectators but playmakers. It's like cricket. The foreign stars matter, but homegrown talent can win you the match. In fact, this local liquidity often cushions sharp corrections triggered by FII exits.
Let's talk risk and regulation. Many retail traders jumped into the Nifty 25 0 CE, but with Nifty still 300 points shy, time decay is eating away premiums. Can you unpack theta cathapad and why caution is critical here?
Certainly. Think of options like ice cream. In the soon every day you hold them, a bit melts away, especially if you're out of the money. That's time decay or theta. So unless Nifty surges soon, these options can lose value rapidly. Exiting early can often save capital.
Meanwhile, India VIX sits above 17, hinting at potential fireworks. And with SEBI switching to delta-based open interest calculation in July and stricter MWPL rules from October, How will these regulatory tweaks impact everyday traders?
These changes are meant to make the market safer and more transparent. Delta-based OI means more accurate tracking of real risk, especially with rising retail participation. Stricter MWPL prevents market manipulation. But traders will have to adapt. Strategy-sold shortcuts may not work anymore.
As we wrap up, what's your final takeaway for listeners navigating this dynamic market?
Stay nimble. Focus on sectors with fundamental strength: PSU banks, FMCG, Realty. Be wary of hype in IT, metals, and speculative options. And above all, always consult your financial advisor before making moves. Smart, disciplined investing wins the long game.